Mm.
Hello, everyone. A very warm welcome to the Scouting Space, the first Scouting Space of 2023. So today I'm very excited because we've got our very esteemed guest for this edition of the Scouting Space, and that's Jasmine Yao. So Jasmine, say hello. Jasmine is the co-founder and executive director of Black Robin Equity. So I came into contact with Black Robin personally about a year ago. And now when I think of Black Robin, I think of innovative developer. So when I say innovative, not only in the design of the houses that they build, but also how they raise capital. So I don't want to spoil what's ahead. So we'll hear from Jasmine soon enough. So when I think about Jasmine, I think of a very much up and comer with oodles of credibility. So we're very happy to have you on the Scouting Space, Jasmine. Thanks for joining us. So Jasmine's a member of the Institute of Directors, as well as having a bit of a legal eagle background as well. She's been admitted to the bar in New Zealand. Smart cookie. Black Robin, I think, is really hitting their strides. And what I mean by that is they've got 6 projects, I think, underway at the moment with a combined value of $125 million. So yeah, big biscuits. So before I get into asking Jasmine some questions, I'd also like to introduce Ron Globe. So say g'day, Ron. Ron is...
Hello, everybody.
Ron's from Property Scout Central Otago, and I know that Ron's chomping at the bit to ask Jasmine some questions that will provide great information for our attendees watching today. So that'll be great. Fun fact about Ron, he's actually a single-figure handicap golfer. I only found that out recently, and he's not the sort of guy to tell you that. So I've just broadcast it to the world, Ron. Sorry about that. So Jasmine, without further ado, would you be so kind to tell us a little bit about yourself and, of course, Black Robin?
Yeah, thanks. I think you've pretty much summed me and Black Robin up. So I'll probably talk a bit more about Black Robin. So we basically founded Black Robin back in 2019. Took us a little while to get the branding and all of that. We have named ourselves, I saw a question on our Facebook the other day, actually. We've named ourselves after the bird Black Robin, because that bird's got a really, really cool conservationist story. So it's all about this gritty little bird on the brink of extinction, and through the hard work of all these conservationists, it's now no longer on the brink of extinction. It's still an endangered species. So we really wanted to take that into what we knew was going to become a really hard market to work in, especially as a property developer. So that's kind of how Black Robin was born. So my co-director and co-founder, Dave Widmore, so he's from a valuation background, very experienced, and we've got a whole suite of really experienced guys in the team. And then obviously we contract out, like our architects, planners, and all that kind of stuff. So Black Robin, what we do is our business is it's in 2 parts, I would say. So one part is the obviously the development and the building of the houses and all that kind of stuff. And the other part is the looking after investors. And that's more my part of the business, which is the investor side and ensuring investors are looked after and communicating with them and all that kind of stuff. So growing the capital base that way. So we'll go into it later, but how Black Robin funds its projects is pretty interesting, I think. I think that's innovative at innovation as well, because we're trying out a bunch of new things that sometimes they don't work and sometimes they work really well. So we'll get into that later. But yeah, I think that's probably all I want to say.
Jasmine, do you want to tell us a bit about the property market in Auckland relative to New Zealand at the moment and your views on that?
So I think if you believe what the news are writing, you probably think that the market's not doing that well. We obviously have had the interest rate spikes, and I think the OCR, the Reserve Bank, has indicated that they're predicting, what was it, 5.5% or something like that, which would be the peak. So I reckon we probably will see a little bit more rising in the interest rates, but I don't think it'll go to like double digits or anything like that. being on the ground, I think, is quite different to when you read a piece of news. So like the Auckland market, when you read the news, it's just doom and gloom. Well, that's the impression I get anyway. But being on the ground, there are still people doing deals and there are transactions happening. And if you get the right advice, you can actually do really well out of this current market. So I always encourage people to see this market right now as an opportunity rather than a problem, because then you're viewing things through that lens. And so you're then finding opportunities, and that's really the basis on which we get a lot of our deals. Like we don't really buy deals that are on market. We scout out basically what we think are the best deals in the market, and that's what we want to get into our portfolio. Compared to the rest of New Zealand, we do have a project in Queenstown at the moment, Mackenzie Shoot. Queenstown, in the words of the agents down there, is just buzzing. And I was down there December and it is humming, it is going off. And the stats prove it. I think nationwide we're down, was it 9.7% or something on year property values or property transaction values. But Queenstown was up some 4.5%. And a lot of that is due to a lot of international interest, especially from Australians who are basically looking for like a holiday home. But also you're seeing, we're seeing a lot of Aucklanders who are wanting to, especially as a result of COVID, change their lifestyle. And so you're getting that kind of pressure in a Queenstown market where it's traditionally been very seasonal and very tourist driven to a owner occupier market. And that's what we're seeing, especially like in Jack's Point. If you look up, for rentals, there's hardly any rentals down there. And that just goes to show how strong that market is down there. So it's a bit variable, but I do think that there are opportunities in this market. It's not all doom and gloom like the newspapers would have you believe. Do your own research, talk to as many people as you can who are in the industry and who are doing what you want to do.
Yeah, I find it. I've got a few people I'm helping down here, and they tend to be moving towards just getting places got interest rates deductibility is one of the key things that's coming through. That's why they're aiming for new, and then also if they're investing here, they can also holiday here if they go short term. But of course, that doesn't help the long term market or the builders for that matter, because it's very hard to get accommodation for staff coming into the regions. There's staff flooding in, and I know in Auckland and in New Zealand we've got a net migration increase at last again, which will probably shift the market. So in terms of the actual Auckland themselves, is there what areas do you look at, and is there any particular reason you look at particular areas in Auckland for developments, Jasmine?
Yeah, you have like your A grade, like prime pieces of land, say like in Remuera or Parnell, Newmarket, anywhere that's got high property values. We tend to stay away from those areas because that's not the kind of stock that we're wanting to build. We definitely go into areas that are up and coming or about to be gentrified. So one of the areas that we identified is Birkenhead. So if you go there and have a look, you can kind of, it feels like it's got growth potential rather than going into an area that's already quite high valued. And we think, so the product that we deliver to the market is what we call middle of the market. So it's, if you think of a bell curve, we want to do the middle there for a few reasons. First of all, because in a hard market, that middle of the market is still there, whereas the top end and the low end tend to drop off. The second reason is we think that's where the most opportunity is, especially with all the changes to the unitary plan and the higher density rules. So when we look for a location, it's basically all the traditional aspects of a good location, like public transport, good schooling, amenities, what does the community look like, access to motorways, all that kind of stuff. So we definitely target what we think are growth areas rather than areas that are already grown.
Oh, excellent.
Jasmine, you must get a fair number of inquiries about your developments from investors looking to buy off the plans. Sorry to put you on the spot a little bit with this question, but how do your developments lend themselves to investors? Like, what are you providing that investors like?
So we've got two sets of investors. So we've got the investors who come in as part of the capital to help the development, and they invest in the project itself, not in the actual property. And then we've got investors who actually who buy the properties and want to put a tenant in at the end. So what we do for I'll talk about the first group of investors a bit later, but what we do for like people who are wanting to buy off plan is we give them access to, say, a full suite of consultants or people that they might get access to. So for example, like a property manager such as yourself, we usually have in place that agreement already so that they can come in and they've already got a predetermined due diligence pack that we have put together. They obviously don't have to take our advice, and we encourage them to go get their own advice anyway. But it just, we feel, adds value to investors. And the other thing is we do always provide people like, you know, like a rental appraisal as well from an independent party. So a lot of what we do is we, rather than take our word for it, we say, you know, look at this company over here specializes in property management. They reckon it's going to be here. And so we kind of say, go and talk to them. So we allow investors to go around and talk to as many people as they can before they make a decision. So it's not like a hard sales technique, like a lot of, I feel, other off-plan techniques can be. You can kind of feel a bit stuck when you're in the room. We're kind of like, here you go, here's information. We've done it already, done the DD, off you go, and come back to us if you like it.
So you connect them with your trusted partners, for example, that are independent.
Yeah.
Good one.
Excellent. Excellent. So would you like to explain to us a bit more, just at a high level for a start off, a bit about how you raise funds and Catalyst, and what the Catalyst is relative to NZX?
Yeah, so developer, so obviously, you know, you've got your traditional debt and you've got your debt and equity. So you can, equity can be like my own money or an investor's money. A lot of the times you'll find people, if they're buying a home or something, it'll be like maybe from mum and dad or a family home. So there's a lot of ways to do that. And then you've got obviously the debt, which is your banking or your second tier financing, or maybe just a private lender. So there's a lot of different ways to finance a development. What we've chosen to specifically do is raise capital in the form of equity from the investor market in New Zealand. And that is predominantly because debt can be very scary in a property development, because when things are going great, your lender is your best friend. But when things aren't going so well, you still have to make your mortgage payments. You still have to make those commitments. And so a lot of the times what you find is in the market, developers can topple over if they're too highly leveraged. So from the very beginning, we wanted to make sure that our debt was at a controllable level and that we have basically enough equity in each deal so that we can ride, you know, through a tough market such as now. And so that's why we went with that particular model. Also, for example, with the addition of Catalyst, because we didn't start off with Catalyst. We started off just raising funds from wholesale investors. So I'll probably go into that in a bit. So like in New Zealand, there's a difference between a wholesale investor and a retail investor. When we discovered what we could do with Catalyst, it meant that we could tap into a much larger market, because without them, we would have to go get like a license in order to reach retail investors. But because of Catalyst and their license, then we can now reach retail investors. So we can basically reach everyone in New Zealand. Everyone can go onto Catalyst and create an account and invest. And that's really special, because it means that investors who previously did not have access to these higher return investments that the wholesale big guys got are now able to invest from as little as $5,000 for our investment. And the reason for that is, as you mentioned about the NZX, so Catalyst is essentially like a mini NZX, a mini stock exchange of New Zealand. So there's only two in New Zealand, the New Zealand Stock Exchange and Catalyst. And Catalyst have legislation that allows them to do this. So because of Catalyst, because they have legislation, part of the rules of being able to list on Catalyst mean we have to make material disclosures. Whereas what you'll find in wholesale offers, we did not have that requirement. So what I really liked about Catalyst was the transparency that it gave to investors. I also liked that we were able to allow smaller investors to come in and give it a go. It doesn't mean that the project is any less risky. It's still got the same level of risk, but it does mean that we, as the lister on Catalyst, we have to make all the material disclosures. So when we give you the investment memorandum and the documents of the list of documents, you can basically take that knowing that you've got the material information that you need to help you make a decision. Obviously, get your we always say to go and get your own independent advice. But I think it just adds that level of transparency that wouldn't otherwise be in a property development investment. And I thought that was something that's actually something that investors really, really like too. They like the transparency part of it. The other reason we wanted to be on Catalyst was because of the liquidity aspect of it. So obviously on the NZX, you can basically buy, sell, trade shares whenever it's open, whenever you want, basically. But with Catalyst, what they have is they have options. So there are set periods in the year that you can predetermine. You can have as many you can have as many as you want. And so investors for the first time can actually come in and trade our shares in the property development.
Oh.
So the way we have structured our property development is the equity that comes in from investors, it stays within the silo. So it stays within the box of the development. So every development is in a special purpose vehicle company, and everyone's kind of just in there. So what that means is we're not like a big fund where money can just slosh all over the place once it comes in. That money that investors put in, they know it's going to be used towards the development. And we say the uses in our information memorandum. And because they are coming in as equity, then we're giving them shares. And these shares are preferred shares ahead of us, the developer. And so what happens is there's actually going to be an auction event probably in February this year. And investors will be able to come on and buy in or trade out, obviously willing buyer, willing seller kind of situation. So for all those reasons, we really wanted to give Catalyst a try. And now that we have, we're probably going to list the other developments on there as well. For just,
That's great.
You did a great job of explaining that, by the way, Jasmine.
Yeah, that was great. Yeah.
Sorry, Ron, if you were about to ask something. Just before I forget, a bit of housekeeping. I'm a little bit late with this, but to the attendees that are tuned into this, I forgot to mention at the very beginning that we're so casual. So if you've got any questions, you don't need to wait to the end. Just put them into the chat box or the Q&A box, and I'll bring those questions up with Jasmine as they're received. Jasmine, just one quick one. You mentioned material disclosures comes part and parcel with being on Catalyst. But just for our attendees, could you give us an example of what a material disclosure actually means? Is it that you've got to provide your balance sheet every 3 months, or is there something about auditing your accounts or having trust accounts or not cross-collateralizing your developments, or what is it?
So we, as part of being on Catalyst, the accounts of the development of the company, the SPV, get audited on completion.
Right.
And that's a requirement. So, and material disclosure, like for example, so we update our IM pretty much on a monthly basis at the moment because the project is moving quite quickly. So like a material disclosure that I've made recently would be where the building is up to. So we've had, the builders are about a month ahead of schedule. So that's something that's material, that's a disclosure, but it's not so much balance sheet because that comes at the end. So what we do at the end of the development, so we pay the investors a certain level of dividends during the duration of the development. But what we also do is we pay them like a bonus dividend at the end. And so that's called a special dividend. So that amount and that number will be audited. And so investors are investing, understanding that the numbers will be audited, which I hope I'm explaining myself.
Right.
And so that kind of gives them an extra reason to invest, because traditionally, like, you know, what happens is in a waterfall, in a property development, you've got, you know, your first mortgage sits at the top, always comes out first. Any pre-sales you get, you know, once they settle, they go to pay them out first, and then you've got your costs, builders, etc., any other overhanging costs that you have, like agency fees, and then finally the developer gets the profit. So rather than keep the entire profit for ourselves, we have our investors are preferred shareholders ahead of ourselves, and so what that means is their profit share, their potential share of the profit. No, their share of the potential profit is out before we take any money out. So we're last. And we've done that on purpose because it gives investors that extra layer, knowing that we're sitting behind them.
That's interesting.
Fantastic. Circling back to something you said earlier about debt being quite scary, and that's partly the reason why you get funds from investors to circumvent getting so much debt from banks and things. It reminds me of, and you went on to say that lenders are quite good and supportive in the good times, but can act in a different way in the bad times. And it reminds me of a saying which I jotted down. Banks give you an umbrella when the sun's out, but they take it away when it starts to rain.
Yeah. Actually, you're the second person I've heard that from this year.
Yeah.
I think it's because a lot of people in the market are experiencing exactly that right now. And no matter how good your banking relationship is, it can be very, very scary when you're leveraged to the help, you know.
On that subject, what sort of ratios, what does Black Robin have as a ratio as to shareholder funds, as to debt that you normally carry when you go into a project?
We typically aim for a 65% LVR.
Oh, awesome. That's pretty good.
So we try to keep it there.
35%.
Yeah. So like the current one that we have listed on Catalyst, we're still raising capital as we go, and what that does is that kind of starts to do this to the debt and the equity levels, which is also really good because it provides a developer with an alternative source of cash, and that's what's so important, especially in a market like this when it's not that much of it sitting around in the debt market. So like developments are capital hungry, like every business. So to have that alternative source of cash in a liquid kind of structure where they can potentially come in and out later, that's something I think is really innovative, and it's worked really well for us for Queenstown. So for our the Queenstown development.
That's awesome, really good. So how do the overseas investment rules, AML, apply in this to the market?
So the overseas AML, did you say?
So AML rules, the anti-money laundering rules.
So because we're receiving investor funds, we have to comply with the what do you call it? The AML CFT Act. And we do that by basically vetting every investor before they can drop the funds. So even if you've signed the offer document and you've created an account with, well, actually, when you create an account with Catalyst, you go through their AML onboarding process.
Okay.
They do it separately. So we use a company called First AML, which shout out to them. They're fantastic. Love their service. So investors all get pushed through AML. So even if they've signed up and they say, yeah, we want to do it, we basically say to them, we're not going to legally accept your money until you pass AML. And that's just a blanket rule across the board. And I think when we first started, it was kind of, it might be a bit of a barrier to entry for investors. But I think everyone's gone through it so many times now that everyone's just used to it. And also the good thing about First AML is if you've been AML through them once, you don't have to provide your stuff again. You just give your permission for the new entity or the new other party to have your information released. So I really like that. That also saves us money, and it saves the investor a bunch of time stressing about passports and stuff.
Tell us a bit about Mackenzie Shoot in Queenstown and where you're at with that, Jasmine.
So Mackenzie Shoot, I think we settled, was it August last year? September, and we started construction in October. And so we had to get to like a minimum level of investor capital before we continue. So that when we raise capital from for any development, regardless of whether it's on Catalyst or it's a wholesale investor, we make sure that we don't use the investor capital until we know the deal is going ahead. And that usually means that we've secured some level of pre-sale, because that pre-sale will lead us into a construction loan. So the construction loan is usually what the debt portion is made up of. And that means that we know that the builder is going to get paid, that we can buy the materials, and that the project's moving forward. What we don't ever want is to use investor funds and then go, oh, no, we can't go forward with the deal. So before we even draw down investor funds, it basically sits in Catalyst trust account. We don't use it. All those conditions have to be met, and we met those in end of September, October last year. So we're using a builder called Hector Eger. They're really cool because they are using prefabrication technology, but it's not like new technology. It's technology that's been tried and tested for a long time in Switzerland. So Hector Eger are a Swiss company, and they now have a New Zealand factory in Cromwell. And that has been a real joy to work with, because a lot of the risk in a development, like you get your financing, you got resource consent, and you get pre-sales, the risk lies in getting the project out of the ground. And if you can't do that, it really stuffs your development, because everything gets blown out, costs get blown out, timing gets blown out, materials, everything, labor shortages. So it's really important that you choose the right builder. So with Queenstown, what we've been able to do with this prefabrication technology is they basically get the materials, it goes through the warehouse, and it comes out. It's almost like it's like a Ford car factory, but for houses. And they come out and they're not cookie cutter. That's the other thing, is they're not like they're not cookie cutter houses. You can actually design them. So the three that we have at Mackenzie Shoot in Queenstown are all architecturally designed. Because they have the tech too. I don't know how they do it, but they're Swiss, and they can do a lot of that kind of stuff. And so once it arrives on site, it's ready to assemble. And I was there when they were assembling the first two houses, and your house is literally up within 2 to 2.5 days from start to finish. You've got your walls, you've got your roof, obviously not like the cladding and stuff, but you've got your roof, everything is enclosed and watertight within 2 to 3 days. And that's just such a game changer for any property developer, because you're not having to deal with, putting up the scaffolding or no, we used to have to put scaffolding up, but getting all the timber and putting the trusses up and all that stuff, that's already done for you. You've literally just gone on site and assemble it. And then the next thing you do is you put the scaffold, you put the like the roofing on, and then you put your windows and doors in. So because of their amazing technology, and again, I think it's just quite innovative for New Zealand, and we need more of it. We've been able to move the project through quite quickly. So as I was saying before, they're a month ahead of schedule, which is amazing for us. And it's also good because it means we can hop on the hot Queenstown market, which is also another real benefit.
The problem a lot of investors are having here is because of the labour shortages. The time, it's a cost of investment while you're doing it, and you're not getting any money back, and you're paying banks. So when you've got 18-month long just normal houses, that's a lot of extra money. So I can see quite a bit of advantage in having a quite streamlined process. But one thing I'm interested in is usually you pay the bank when you hit a stage, and the stage you get the foundations down, and you might get the walls up and then the roof on, and etc. How do you deal with that with Hector Eger? Because they basically come out and then they're pre-made, and you just put them up, and you'd have like 6 stages in a go,
Yeah, so the funding is a bit different. The drawdowns. So the drawdowns are based more on like milestones, like finishing the roofing, cladding, having the wires, the plumbing, all that kind of stuff. Because what I've noticed is the first phase, the riskiest phase, has been just such a breeze because of their technology and because of the way it works. Whereas with a lot of building sites, like if you can't get out of the ground, you're in a lot of trouble. Because now that we've basically got the 3 houses on site and they just need to be finished up. So what that does is that lowers the risk quite considerably in an investment like this. There's obviously still development risks, like something could go wrong, and it could blow out the budget, or it could, delay the project. But as you progress in the property development, the risk gets lower and lower. And with what we've been doing in Queenstown, it's like we've got to that point quicker. So yeah.
Just for the attendees, we're talking about the Mackenzie Shoot project, which is a really interesting project. And if you want to see photos of how quickly this thing goes up, you can go over to the Black Robin Facebook page. Is that right, Jasmine? Because that's where I've been watching it. It's very interesting.
Yeah, I was just down there like taking selfies, and then took a few videos, and then decided to do like a whole reel on it. So
a question from me, Jasmine. How does your company, Black Robin, how does it fund its own operations? Is that through, I'll just take a wild guess, is it through the developer margin or other fees, or?
So we've put in, as founders, quite considerable money ourselves. And what we also did was we did a completely separate funding round for our parent company. So our parent company is the majority shareholder in all the subsidiaries, but it's also the Class B shareholder. So the Class A shareholders are the priority investors in each subsidiary. And so we did a capital raise from wholesale investors specifically for that purpose, because we realized that if we wanted to get to where we wanted to, the capital that we initially put in was definitely not enough. And the other thing we realized was the property market was not going to turn over our projects fast enough like they were when we had initially conceived the idea. And so we basically needed, other investors to come in.
Yeah, nice one.
That's really interesting. So when you're actually funding something, do you, like, yourself, before you're raising funds, do you like purchase the land and do the concept? Is that the phase you get to? And then once you've got the concept, then you sell, and then you go to design after that?
Yeah. So what we usually do is we as in the parent co, or the founders, the shareholders in that company, we put down the initial deposit to go unconditional once we've done all the DD, but we would have paid for like consultants and done our DD before that, knowing that we're going to put investors in this later. So we don't typically raise any money from investors until we've at least got resource consent, so that we know we can do what we want to do. Yeah.
So the actual concept plans, do you go to an architect, or is that something that Hector Eager does for you? Or does Hector Eager take those concept plans and turn them into more detailed plans?
So Hector Eager is the builder. So before we go to Hector Eager, we've done the planners, we've done the if the land requires, we've done like geotech. We've the architect has come up with the concept, and we've had a resource consent. So we take the resource consent, and with someone like Hector Eager get with the building consent. That's where they typically come in.
I would have thought with Hector Eager and the sort of building, there would be a limitation on the type of materials that they could use, that you'd have to feed back to the architect at the start. Is there?
Yeah,
obviously, they're not going to build a rubber pack home, are they? So,
what? Sorry.
A rubber pack block home, are they? Because they're pre-built, So you have to have some sort of feedback loop, wouldn't you?
Yeah. I mean, with Mackenzie Shoot, we essentially bought the site with those already in place. So the vendor had already done a lot of that for us, and so because the thing is with 3 houses, it was outside of what we would traditionally have wanted as a site. Like we usually go for 20 to 50 units per site, because that's the scale for us that we require for a project, to put on all the effort, all the money to fund the capital raising, all that kind of stuff. But with Mackenzie Shoot, because it was basically set and ready, we could go straight away and raise capital. And plus it was at that point, out of the entire portfolio, it was the one that was most suitable to a raise on Catalyst to try it out with retail investors, and the feedback's been really good, and we're quite happy we're in that market down there because it's such a hot market right now.
It surely is. It's very hot. Yeah. So are you considering doing something similar in Auckland with a Catalyst
Yes.
market?
Yep. So we are scouting for sites currently. We're likely to do it with our Birkenhead project because that's received resource consent for 45 apartments, beautiful views of like the Waitemata Harbour and the Auckland skyline, and unobstructed basically forever because there's a reserve in front, so it's an elevated site. But that's a little bit more than Mackenzie's shirt that we'll be looking for. So that's probably going to be the next cab off the ranks. But again, it really just depends at the end of the day how we end up funding it. Whether we do end up putting it on Catalyst, we probably will. But I mean, can't say yes or no yet.
You should have a chat with me after this. So we've got I know of we don't sell it because we're property managers, but I know of an amazing site near Queenstown that's come up on the market that you might be interested in. Absolutely amazing, right behind the gardens, looking out over Queenstown. So yeah.
Yeah, we're wanting to acquire more, especially more in Jack's Point where we currently are.
Yeah, awesome. That's really interesting.
Well, shall we wrap up there then? Unless you've got any other burning questions, Ron or Jasmine, if you've got any further remarks that you wish to make, you don't think we've covered. I think we've covered a lot of ground. It's been fantastic hearing about Catalyst and the two types of investors you're working with in terms of getting money in, but also who you're selling your finished products to, and also how you're actually some of the suppliers you're using to put things together, like the factory down in Cromwell. So very interesting. You're definitely living up to my early statement that you're a very innovative developer.
Thanks. Innovation comes with its own, with its positives and negatives, but I think in general everything's been positive. It's been, I mean, the experience we've had from the property network and the investor network is very encouraging. I think a lot of the things that we're doing are kind of like overdue, especially like what Hector are doing. I would love for Hector to have a factory in Auckland.
Yeah.
That would be amazing. It would just change the landscape of what people are doing. So yeah, over time that'll happen.
Not to take away from your innovation one little bit, but you're also gaining innovation by partnering with Catalyst because of all the innovation and the uniqueness they have of offering something that's different to the New Zealand Stock Exchange, but similar at the same time.
Yeah. Yeah. So, I mean, yeah, as I was saying to you guys before, earlier on, definitely want more people to know about Catalyst because they're not like a like a crowd. They're not like a pledge me or anything. People need to understand that they are actually they're like the little brother of the NZX. So investors get the same protections as they would get if they were on the NZX, and that's something that's also quite important. So over time, I'm quite excited to see where Catalyst goes. We want more property developers on there because then it's more variety and it attracts more people. So
I like that analogy, little brother.
Yeah.
It is.
Well, in my sign-off, I might leave our attendees with a little Warren Buffett quote, which I think is extremely relevant at this time in the market. So he said, "Be fearful when others are greedy and be greedy when others are fearful." I think we all know what that's referring to. So, yeah. Jasmine, it's been phenomenal having you on the Scouting Space. We really, really appreciate it. I found it extremely interesting. And Ron, thank you as well. You've provided so many great questions, which got Jasmine on a bit of a roll. So you've been wonderful as well. So thank you so much, both of you, for being guests on the Scouting Space.
Everybody, come back next month. We're going to be lining up more developers, hopefully more in Central Otago and Christchurch. And we hopefully get the one for the, I'm lining up the developer for the development next to Jack's Point. So you might be interested in that, Jasmine, as a building towards town.
There's a lot of good ones coming up. So Jasmine, thank you for being the first one this year.
That's all good. What an honor.
Okay.
Thanks, guys.
Thank you. Thank you very much.
Good night.
Yeah, pleasure.
Bye-bye.
Bye-bye.